So we're seeing a move back into the fundamental tokens, and you are starting to see some big bounces, right? If you look over here, you have, of course, Sonic up really well in the last couple of days. You have Say making a comeback over here. Berachain is up as well. Aptos is up. So some of those layer ones are starting to position. And then you have this new token called IP, right? If you look underneath, it says story as a purpose-built layer one blockchain. So it seems like piggybacking on that layer one narrative. And these are some of the top gainers. So in today's show, we're going to have a look at, can you trust the pump, right? Can you trust the bounce that's occurring within the market right now? Is this an opportunity to exit your underwater positions before they test the underside resistance and mark back down? Well, we'll discuss that in today's show. We'll also have a look at some of the stocks over here within the stock market. You can see there has also been some volatility within that sector. So make sure you smash the like button, hit the bell notification, and subscribe to the channel. I also do have a little bit of a freebie giveaway for you guys in today's show. So we'll talk about that in just a moment. First, let's quickly have a look at the stock market. Yesterday, specifically, we spoke about having a little bit of a long bias in the short term for a possibility of a short-term short squeeze, right? What is a short squeeze? It's where short traders are forced to cover their, at least their calls, and basically that results in a market buy, and the market spikes up very quickly or stops them out, right? And the basis of that was because we started to see the S&P 500 putting in new all-time highs once again. We saw the Nasdaq doing exactly the same thing, right? Consolidating right around those all-time highs, and it was very bullish. And we spoke about the potential for the catch-up trade, right? The catch-up trade, that being crypto to catch up to the stock market, where you have the stock market putting in new highs, you have gold putting in new highs as well, but crypto has been very lackluster. Now, there has been some speculation that big market maker Jane Street could be essentially suppressing some of the price within crypto markets as well. So we'll see if they start to get squeezed today. They trade the CME futures charts, and based off of yesterday's move, they may be underwater today. So you might get one more spike up. We'll look at what that looks like on the lower time frames. Just quickly looking at the rest of the markets over here, Dow Jones soon probably should be pushing up to new all-time highs over there. If we look at MicroStrategy, well, MicroStrategy, of course, coming down alongside Bitcoin. This is going to be your key area coming into the mid-range. We should probably clean these charts up a little bit over here. So let's just delete some of these, at least these drawings over here. Let's clean that up. All right, so MicroStrategy, we're watching as it comes down into the zone. One thing you do have to be aware of with MicroStrategy is that theoretically in the previous cycle, MicroStrategy did top first, right? So just understand that if you had to overlay the Bitcoin chart over here, MicroStrategy had already put in its top and continued to consolidate while the Bitcoin price continued to make new highs. What it meant was that it's closer to the end than you would expect, right? So we need to be aware on MicroStrategy chart and continue to track this just in case, right? Just in case something like that does take place. But nevertheless, mid-range for MicroStrategy at 298, you should find some support over there. Other things to have a look at, remember we've been tracking Tesla. So we're looking at this chart over here with the Tesla bounce. You know, maybe that's already going to be the rejection. Maybe it won't make it up into the underside resistance at 380, but I'm looking for a deeper move down into 293, right? Now, this is the part where I have an opportunity for you guys where you could actually take this trade for almost for free, as close to free as possible, and you could make a couple of $100. So you can just listen up really quickly. How would this work? Well, we've recently partnered with BTCC. They do have a sign-up deposit bonus, but this is how you get the highest bonus, right? All you have to do is, forget depositing anything over $200. $200, the way they've structured it, $200 is the sweet spot, and that will allocate the maximum amount of bonuses that you'll get, which if you look in the description below over here, BTCC deposit $200, and you're actually going to get $175 for free. Then what you can do is once you've done that, you can come through onto BTCC, which allows for equity trading as well. And this is the trade setup that we're looking at. So again, going back to Tesla, we're looking for the move down here into about this 290. If you took that $175 that you get for free and you place your limit order down here at about 289, that's going to be the sweet spot where we're looking for a bounce. Stop loss goes below. Well, you could stand to make $324 off of that $175 free dollars. This is free for anybody to do. You don't need KYC or anything to join. You might need to KYC to unlock the maximum bonus. If you don't do the KYC, I think you just get $100, right? If you do the KYC as well, you get $175. So the link is in the description below. show them some love, jump in over there. We're going to be taking a lot of trades over there. I have marked out a couple of coins over here. If you want to favorite these with me, these are the ones that I'm most interested in trading over the coming days and weeks. I'm looking at Coinbase. I'm looking at the gold chart. Why gold? Well, remember, gold is coming onto those massive tops. TD sequential 9 top on the weekly, the 3-month time frame, and the yearly, which we covered already last week. The interesting thing as well with gold, if gold doesn't pull back hard, but at least just consolidate sideways, that also allows for crypto to play that catch-up phase, right? So we got Coinbase Gold, we got Meta. Why Meta? Well, because this is literally what the Meta chart looks like. It's just straight up. I mean, this thing has outperformed Bitcoin. It's actually unbelievable. If you look from the lows over here and you look at what Meta's done from the lows to the highs, that is a 734% return. I think Bitcoin's done a little bit less than that, but Meta has theoretically outperformed Bitcoin with way less pullbacks, right? If you look at Bitcoin's pullbacks have been pretty severe. These have been much milder, right? Around 20% pullbacks, where we've seen closer to 30% pullbacks in Bitcoin, right? So that's the other one that we marked off over here under favorites. The next one, we're looking at MicroStrategy. We're looking at NVIDIA as well, because NVIDIA has a lot of volatility. Tesla, S&P 500, those are the ones you can mark off. So again, deposit $200, you get $175 absolutely for free, which you can use to trade with. So continuing on over here, this is also something we were paying attention to yesterday. We said it doesn't have to go all the way here, but this would be kind of the final line in the sand for the bearish case. So if you were looking for the short trade or the bearish case over here, you do have your highs, your lower high, another lower high. This would theoretically be the next lower high coming into the 0.382 fib level at 107.94 on the DXY. Now we want to see the DXY break down and go back into this trading range, because if it does, that could bring the liquidity, the much needed liquidity for the crypto markets to start to catch a bounce. So we will continue to monitor this, and maybe too soon to suggest that we are going to break down over here, but this is theoretically an underside retest, showcasing that it is holding this as resistance, which is exactly what we want to see. So where do you get confirmation that now you're not going to go as high up as the 0.382? Well, of course, if you take out these recent lows, which is at 106.56 on the DXY, that will basically confirm that you're going to start to fall a lot quicker, right? So that's one thing that I'm watching over there. Now, if you do have that play out, well, imagine this. We are 10 days away from the end of February. February is typically a very strong month for crypto. March is also a very strong month for crypto, specifically in the post-election, post-halving year, which would be this year, right? That is where your bull runs typically find their tops. Well, imagine you could start to see a little bit of a catch-up. We have been following most similarly to 2017, and we deviated a couple of times, both above and below. If you look over here, we are the pink. We deviated above, we deviated below, above, and then now we're coming once again below that 2017 line. So that would allow for that catch-up phase to start to take place. And usually this is the point of the cycle where you do start to see rapid markup, right? Over February and into March, you start to see this aggressive catch-up. So we'll know soon enough if we're going to get that catch-up or if it's truly going to deviate. If it does deviate, the worst-case scenario downside targets are still the same. It's at $83,000 is going to be the main sweet spot, right? So we'll keep watching DXY. If DXY comes down, hopefully we start to see a markdown over here on the USDT dominance, which should do good things for Bitcoin. It's too soon to tell. The way that we can get full confirmation over here, or at least more confidence, is if you can start to take out that previous wick low, which is at 4.37%. Break and hold below that with a few daily candle closes, and you might lose this resistance level. And then you'll see optimism come back into the market very quickly. And just understand this, towards the end of the crypto cycles, towards the end of the bull markets, we also had been looking at that 18.6-year real estate cycle from Phil Anderson, which we also know Jason Pizzino covers quite at length. Then you expect increased volatility, right? Leading into that end phase, you experience that increased volatility, not only in price, but also in emotions, right? Your emotions will swing wildly. And this is what I'm talking about, extreme fear up here. Mark my words, if you start to drop like this into this zone over here, you will immediately position from what was extreme fear into greed, and then extreme greed if you start to get down into these phases. And that is exactly what happens within these cycles, especially towards the end phase. So quickly having a look at the health of the total cryptocurrency market cap, which is probably one of the most important charts to always look at. Why? Well, because it shows us, is there actually real new money that's coming into the crypto market, or are we just shuffling cards between friends in the same ecosystem, right? We're in our own echo chamber. Well, if this is going up, then it means that new people are joining the party. New money is coming in. Right now, I think it's pretty easy in terms of an invalidation. You definitely don't want to see any candles below that, right? Below this wick low that we had from the week of the beginning of February, that first week of February, the wick low over there, meaning that the total cryptocurrency market cap should not drop down below those previous levels. Let's just quickly highlight exactly where that is. We have the low at 2.81 trillion, right? 2.81 trillion. You do not want to break below 2.81 trillion. That is the line in the sand. And it's going to be the same thing for total 2 and for total 3. This is still looking okay, right? It's still looking okay. Yes, it's sketchy. Sometimes also the best buying opportunities are in the most sketchy environments. And this is still sketchy. You could definitely see, another wick that comes down like that, really, really shake people out. But again, no closes below that candle. If you start to close on total 2 below this wick low, it's over, right? Basically, you can start to say that we're in big trouble and we're going much, much, much lower. Total 3 is going to be the same thing. Also, just quick reminder, this is still theoretically a bullish chart pattern, right? You have your cup and handle. Remember, this has massive implied targets over here, which would take you up to about let's just quickly line that up over here to give you the perfect level. That is 2.26 trillion, right? So you broke out of the cup and handle over here formation, and very rarely, but sometimes you do get lucky enough where you get a perfect back test back into the neckline, and total 2 has done exactly that, right? Which means getting the measured move out here from the bottom to the top, you are looking at about a 90% move, almost a doubling in price for the total 2 cryptocurrency market cap. That is the full market cap, excluding the Bitcoin price, right? Or excluding Bitcoin's market cap. What this means is if you can pick the right coins, which we're going to look at today, which some of the leaders may be leading into the next phase, assuming you do actually start to mark up from here, then you're probably going to get much more than double, much, much, much more than double, right? The doubling is referring to the total 2 cryptocurrency market cap. Now, some of the coins will receive much more of that money because it's a winner-take-all environment. When it comes to life and markets in general, it's a winner-take-all environment. The Pareto principle, 80-20 rule, right? You'll make 80% of all your money from 20% of the bets that you probably place within the markets. And that's exactly how it works. So if you pick the right things, you're going to get much more than a doubling. Okay, total 3 over here, also holding up, same story. You don't want to go below that wick low. Others, this one is a little bit weaker. So at least with total 2, you are still hanging and testing above this level over here. So others has been wrecked, right? Very, very, very weak over here. This needs to start to get above the breakdown level, which was over there. If it gets above 332 billion, things will start to look a little bit more healthy and a little bit better over there. All right. This is what we mentioned yesterday. Pay attention for the possibility of a bit of a short squeeze. And you did get that, right? More shorts getting wrecked than longs over there. Let's just quickly do a refresher and double check the above information over here. So right now you got 50.3% traders long versus 49.7% short. Volume has actually dropped off quite significantly by 20%. Based off of yesterday, but open interest is actually starting to pick up over here. Volume is still declining over there. We'll refresh this later today. We're looking at the Bitcoin dominance. I still give a slight edge to the bulls over here in terms of the Bitcoin dominance. More likely to continue towards the upside than breakdown. We haven't seen enough to confirm that breakdown yet, especially when you look at the way these wicks have formed beautifully into that fair value gap. And of course, you have the MACD, which is now starting to move with strength towards the upside, right? The moving averages are coming down, but the actual MACD is still moving up. So a little bit more time is needed to time this transition for where altcoins are going to outperform. Here's your Bitcoin chart. All we need is just one daily candle. Just get one daily candle closing above here. We haven't managed to do that, not even once, pretty much since the breakdown level. The candle wicked all the way down, immediately spiked back up, closing at the top side. That's the only close that we've had above this high volume points of control. And then every single other candle has closed below that, which means that we've spent a number of days. How many days exactly? We have officially spent 16 days, 2 weeks underneath this high volume points of control region over here. So if you even start to close one candle over there, you'll start to see the sentiment very, very quickly shifting, right? And then where are the bulls back? Bulls get back if they get above this zone over here. Nothing has changed. This theoretically, if you're a very, very safe, cautious trader, what is this? This is labeled the no trade zone, right? No trade zone. You don't need to take any trades over here. You could theoretically sit on your hands, but I know that's not you. That's why you're here. That's why you're watching every day, because you love to trade. So ultimately, we have to look to the lower time frames if you love to trade, to time your entries. And I'll show you what that looks like in a moment, right? Okay, weekly still looks fine over there. All is good and well. Low volatility over here, which shows that a big move is coming. So once you break that trading range, the all-important trading range, either above or below these key levels, that's probably the direction of where price is going to go next, right? There's still a lot of people calling for way lower prices, right? There's still a lot of people that are wanting to see, $70,000 Bitcoin, and it is possible. So one of the ways that you can still maintain market exposure is by sticking to spot, right? This is one thing that I've looked at myself, is rather maintain that spot position over there. And if you do still have conviction that it is a bull market and you're going to find major support in that 80K region, should you flush down, well, you can always use a little bit of margin, right? Use your BTC as collateral, small amount, not all of it. Obviously, use a small percentage of your BTC as collateral and take a leverage long position from that 83 to 85K level, should that drop. And that will make up for, of course, the price that's pulling back over here in terms of your spot. That will make up for the lost gains on the spot. And then it's as if you basically bought over here. Why would you not just sell everything and buy over here? Well, because what happens if this happens, right? What happens if that happens and now you exit the market hoping that it's going to come over here? Now you're left chasing price. You can do that, of course. Absolutely, you can do that, but you have to make your bet. You have to understand that you're going to be taking a massive opportunity cost. So it all depends on your time preference, your strategy, how long you want to be in this game for, how much money you want to make, right? These are all loaded questions. If you're somebody that feels comfortable and sleeps well at night by being in cash and just taking your trades when there's a great opportunity and moving in and out, great. I feel more comfortable in a bull market to maintain BTC exposure. I feel very uncomfortable if I'm in a full cash position in a bull market, and I still believe this is a bull market, right? Based on many things like this, right? Timing cycles, things like that. All right, continuing on. Let's just continue over here. So low volatility, we're expecting a big move. This was the long trade that I gave yesterday. It is in profit. I mean, if you're terrified, simply just do that. Move the stops into break even, but you have a high chance of still getting stopped out. This is the invalidation is below the wick low that occurred on Tuesday. It's really as simple as that for me. Even in terms of spot, you could theoretically stop out underneath there. If you do breach that level, there's a chance that you're going to break down towards those low regions like the 83 to 85. So giving the bulls a little bit of a chance over here, holding this long-term trend line over here, and seeing if in the next couple of weeks, right? I don't expect this to V-shape out of here over the course of today or tomorrow. Realistically, I'd give them, into March to see if they can start to slowly grind this thing up. You can imagine if prices do actually end up getting into this higher region over here and you start to see, prices holding up over here, how the sentiment will change, right? Once again, because that's going to start to look like a massive high low, potentially even, a W formation. There it is, right? That would be a W formation. You break the neckline and then very quickly you start to reach towards those at least major targets that we've had for a long time. The major targets, $120,000 to $130,000. Of course, anything can happen. You could break down. That's why I have a plan. Have a plan for what you're going to do if this happens. Have a plan for what you're going to do if this happens, right? You always need to have a plan when it comes to trading. Okay, bulls have managed to get price back above the yellow line that's running horizontally here. That is your RSI level. Now they're going to be fighting tooth and nail to reclaim these moving averages. There is major support over here between the 9 and the 18 EMA on the daily time frame. We spoke about two potential outcomes yesterday. We said the reason that I said I think that you're more likely to get a spike up over here is because very rarely does anyone get a free ride all the way down. That was shorts over there, building up shorts over there, building up shorts, 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 and usually they don't just get the free ride. So we said, even if you were to come down into this low region, what's most likely to happen first is spike up over here, take out all those short traders, get everybody excited, FOMOing back into the market, and then you come to smack these longs, which their stops would be placed over here, and then you take those guys out, right? That's what we said is the most likely. So I'm still sticking with that. But we said, of course, it's always possible that you do just bleed straight through. So have a plan for both scenarios. So that's currently what's taking place over here. We've also seen the bulls continuously struggling, right, to get through these key levels. This is the 4-hour time frame. Your 50 and 200 EMA, just rejection, 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 rejection. But we said after 1, 2, 3, 4, 5, 6, 7th time, surely they have a better chance of breaking through. What we've witnessed is each of these rejections have occurred around the New York Open, right? And this is where that conspiracy of Jane Street comes in, that they've been suppressing price. But now the futures markets, of course, have closed, and they might be holding underwater positions. So later on today, we need to see when the markets open, could you get a little bit of a further spike? If you can, and you can convincingly start to close above this 200 EMA, that would be the first time that we might be witnessing a little bit of a shift in, at least in the momentum within the market, which has just been down only for a long time, right? Just struggling with these EMAs. You can start to reclaim those, but there's a lot of resistance, right? I showed you the 9 and the 18 EMA on the daily. You have the 200 EMA over here. You have your mid-range over here. There's a lot that needs to be reclaimed. Really, you need to get above this breakdown level over here, where this candle dropped like a rock, right? That's the big level to start to reclaim. This zone and this zone, conservative traders, basically, you can just wait for that. All right, so currently I'm long on Bitcoin on spot. That's my current positioning. As of the messaging, at least within the Discord, I had, of course, dropped all of that information. Enya had also given yesterday updates on, we're looking at specifically the inverse head and shoulders on Solana, which started to break out over there. So you started to get a breakout. We also having keeping a close eye out on the inverse relationship between the USDT dominance, which we want to see USDT dominance break this level over here below its 50 EMA, and Bitcoin to break above the 50 EMA, which is downtrending, right? So we've now started to see that for the first time. If you want the full updates of everything, it is in the Discord, right? In the Whale Room Discord over there. I think this is the best Discord in the entire world. I'm not just being biased. I've been in a lot of them. And we are one of the top ranked. You can see we have scalp traders over here absolutely smashing the short-term trades every single day. So if you are someone that wants to take those short-term trades, jump into Whale Room. There is so much value in that group, so much value. I'm very, very proud of it. All right. Having a look over here, the move back to utility, right? The move back to fundamentals, the move back to utility. We're starting to see the shift. It looks like the biggest gainer is probably going to be Sonic. I'm on the Phantom chart because we want more price history. Otherwise, we're looking at a chart like this, which doesn't give us much. This Phantom chart is still trading at the same values as what we see in the Sonic chart, right? So we're looking at this one over here. What you've seen is since you broke structure, you broke this down sloping trend line over here, you reclaimed the previous month's low, you started to move up really, really quickly. And now this is going to be major support, right? Previous month's mid-range, previous yearly open, any price action that comes back into there is going to be a good zone. If it does manage to hold and form some sort of a high-low, that's probably going to be your next phase where you're looking for price to mark up higher and you can trade it towards the previous month's high. If you again want those trades, we drop them in Whale Room, right? So I'm watching this area very, very carefully. If you do look at the 4-hour time frame, I think it actually makes sense to at least attempt to trade over here based on the posturing of this candle. If we do see the stock market bullish today, if we do see the continuation of a bit of a short squeeze on Bitcoin, then this is a nice trade, right? The closer you can get to the invalidation, the better. Just like an easy little scalp, because if it's got relative strength, it's going to move very, very quickly up towards that 90 cents region, right? So that's giving you about a 4-to-1. If you took it from here, still 3-to-1 risk to reward ratio. Of course, use risk management, be careful, don't over leverage on a position like this. Now you can look at various other charts, right, that are fundamentally strong. At the end of the day, despite the hate around Solana because of the meme coin cabal, well, this is the picture, right? Just take a mental screenshot over here of what Phantom looks like. So Phantom obviously having come down into the bottom of the range, broke the downsloping trend line, broke above the previous month's low, and then obviously started to move up, right? So TP1 area, if it took it from the low over here, that would have been a perfect trade off of that wick, and TP2 on the top side. Now, keep in mind when you look at other fundamental coins, you know, like Solana, which sentiment-wise has been absolutely smacked. Yes, it could come lower. Absolutely, it could come lower. I'm not advocating you necessarily take it over here, but if you do wait for the break of this long-term downsloping trend line over here, you could possibly be presented with a similar trade setup, right? So if this is now just looking on the dailies, you need to use lower time frames to get your trigger plan, but essentially trading it up to the previous month's mid and even at an extreme, the previous month's high, that would present risks reward-wise a very, very favorable trade. So the way that I look at it is, you know, of course, you can attempt to get earlier entries on the low time frames like this with a high chance of still getting stopped out, but building a long position over here, stops below those lows is 6.8% away, and then you can start to raise those stops into break even if you do break this downsloping trend line, right? Manage the trade. Trading is like having a baby, right? You have to sit there, watch it, manage it, and watch as things unfold, right? Okay, so that's Solana over there. We covered Sonic. The other one that I want to have a look at in terms of fundamentally strong positions is Sui, right? So you can see similar, right? Sui has this, you know, downsloping trend line over here. Probably that's going to be the line of best fit. I would go with the most conservative line as possible. And basically, if you get above the previous month's low, you'll be breaking this downsloping trend line. And then you have the same trade opportunity, right? It's all exactly the same thing. So get above the previous month's low. That's considered the deviation. You take a shot, make your stops as tight as you possibly can that make in terms of what makes sense. Target 1 and target 2, right? So entry over here, target 1, target 2. These are the fundamentally strong things. Hype's put in a bit of a different picture. It hasn't swept below the previous month's low like a lot of the other coins. It is still holding up over here. The only problem with Hype that I have is that, you know, this is a lot of longs that may have built up over here, which means if you do start to sweep this, then yes, you could very easily come back down to the previous month's low. So again, managing your risk. These are some of the trades that I'm looking at, some of the things I have interest in, you know, Phantom or Sonic, maybe another quick trade on Solana, Hype, that's the other one. Sui, we covered Sui already. What else have we got? Let's see, Ton over here. Ton still looks very, very weak to me. Look how far away it is from the previous month's low. This thing's been wrecked. Okay, let me know in the comments if there is anything else that you want. Okay, cool. Let's have a look over here. What else have we got? Real world assets, anything standing out over here? How's Mantra doing? Mantra's still holding up, still very, very, very strong. Extreme relative strength in relation to the rest of the market. We did speak about this, that, you know, this price chart is probably being manipulated towards the upside, which makes for easy trading. So there it is. You know, if you are looking for a trade, I mean, pretty much you can have a hard stop underneath that, right? There it is. Any position that you build over here, hard stop underneath, and you can target the fib extensions on Mantra. Okay, let's see what else have we got over here. Anything else stand out? Let's see. Okay, Brett's putting in a bit of a move over here, so let's just quickly clean this up over here. This is of course it's come down a lot, so it's got a lot of work to do over here. I would wait for a real proper shift in structure, right? This has got a lot of work to do on any of these meme coins. Okay, cool. What else? Guys, remember, Whale School, jump into Whale School. 4 days left to go, right? 4 days left to go. We start on, I think it's on Monday. Yes, Monday we're going to start. We're going to be doing it over when the US markets open. I think US markets will already be open. So there's a lot more opportunity for those of you who are in the US, right? And then also protect yourself. Remember, get a NordVPN if you don't already. I keep hearing about people getting scammed. I always say this, the easiest way not to get scammed, don't give your money to anyone. And also don't click on unfamiliar links. One of the ways that they do it is in your Phantom wallet, they might send you coins that you've never seen before, right? If you click on those coins and you try and move them and interact, that's where your wallet can get drained. Things like NordVPN will protect your IP and help you to spot these types of things or flag it sometimes, right? Not every single time, but sometimes if you use the link below with the Banter specific link, you're getting 73% off, right? It's only $3.33 a month to protect your IP. As you can see, I always have my VPN on, right? I'm connected right now. obviously in Dubai, but it says I'm in South Africa. So I'm always connected to the VPN because I know people are always trying to hack me because I'm on YouTube, right? And I trade crypto. Pretty simple. All right. What else, guys? 𝗕𝗬𝗕𝗬𝗕. Sure, we can have a look at 𝗕𝗬𝗕𝗬𝗕. Let's go through to this chart over here. How's 𝗕𝗬𝗕𝗬𝗕 doing? We'd have to look at these things on the high time frames, though. I think just to, assess the damage. Now, it is possible that you put in a massive bounce from here, right? Why do I say that? Well, we did. That's exactly what 𝗕𝗬𝗕𝗬𝗕 did, right? 𝗕𝗬𝗕𝗬𝗕 looked similar. I'll show it to you, right? And I'm not saying that this is absolutely going to happen, but you do have something similar over here, right? Price in this kind of expanding, broadening wedge over here. And let's quickly go to 𝗕𝗬𝗕𝗬𝗕 on the weekly, and you can have a look at this expanding, broadening wedge, right? So you have a similar picture over here. So that's why I say, like, things can shift very, very, very quickly. That's why you need to, not become complacent. Don't give up in the market. Try pay attention to the low time frames. If you see any sign of getting an entry, a trigger, take it, right? It's about managing the risk. You move your stops into break even as quick as possible. And if you get stopped out, so be it. All right. What else? Cool. Let me know in the comments, guys. Look, we can also do a lot of altcoin requests tomorrow. Fridays are usually slow in the market, so maybe we should reserve that for the altcoin requests. I do want to remind you, get your free $175, favorite all of these over here, and then let's start layering in those orders over here on Tesla specifically. That is on the BTCC exchange, right? All right, that's it from me, folks. I'll see you all on the next one. I hope you have an absolutely stellar day. For the rest of you, I'll see you on the Whale Room live later on today. If you do want to join us, guys, there's a link below that will take you to Whale Room. Otherwise, I'll catch you on the next one. Have a good day, everyone, and cheers for now. Bye-bye.